We've seen multi-month consolidations, but overall the uptrend was strong, and gold made a new all-time high at $2,790 end of October. And since then, it's basically consolidating. First, we got a big pullback down to 2,535, which has been the low so far. And basically, over the last 2 months, gold is going sideways, somehow in a triangle, consolidating that massive run higher over the last year. And it's been a very strong bull run last year. Silver has been a little bit lagging. I mean, it mirrored the performance of gold, so to speak. Overall, I think the bull market is intact. It's a healthy consolidation we're seeing here, and my next price target is $3,100 roundabout.
Gold has experienced a strong uptrend, reaching a new all-time high of $2,790 in late October before entering a consolidation phase. Following a pullback to $2,535, it has traded sideways in a triangular pattern over the past 2 months, consolidating last year's significant gains. This reflects a healthy bull market. Silver has lagged slightly but continues to mirror gold's performance. The following price target for gold is approximately $3,100. Florian Grummes, a renowned financial analyst and investor, points out that markets in 2025 are expected to experience significantly higher volatility, making it challenging for buy-and-hold investors. Violent moves across nearly all asset classes are anticipated, driven by high market correlations, liquidity, and money flows. If the stock market faces trouble, gold and silver will likely also be impacted due to these interdependencies. While the authorities are expected to step in with monetary interventions during crises, as they have in the past, this could create short-term uncertainty. Despite the turbulence, gold is projected to reach $3,000, and Bitcoin may rise to $30,000, although these gains will likely come with sharp fluctuations. Florian explains the market environment is shaped by geopolitical tensions, the rise of AI, and political shifts, including a new administration focused on free markets and reducing bureaucracy, which may initially cause disruptions. Sentiment remains fragile, with even minor pullbacks sparking panic, presenting opportunities for contrarian investors. Overall, while macro trends like monetary easing, quad boom, support a bullish outlook for key assets, the year ahead promises to be volatile and unpredictable. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
Generally speaking, for all the markets, my expectation is that we get much more volatility than last year. So I assume it will be much more difficult for the buy and hold kind of investor. I assume we're going to see violent moves in nearly all markets. That's my general assumption. It's tricky because I believe that markets are very much correlated these days. I believe that liquidity and money flow are most important. And I believe that, for example, if the stock market would get into trouble, I think that the precious metals, gold and silver, would not be able to do their own thing. I think they would be also very much affected by it. But then again, the big question is, will the stock market really ever get into real trouble? I mean, we haven't seen a real bear market since the 1970s. We've seen one massive, nasty financial crisis in 2008, but this also lasted not even a year. It was less than a year. So because, of course, once there is problems, the authorities immediately step in, print more money, and help somehow to turn around the situation. And that's what has to be expected for the future as well. And then if you look at the sentiment, which is also a very important part of what's going to happen in the markets, I was surprised to see so much panic already over the last few days and weeks, because the stock markets have basically taken a breather, because Bitcoin, for example, has taken a breather, because gold came back down to 2,600. So these little pullbacks seem to be enough already to freak out everybody. It looks like everybody's invested with 100x leverage. I mean, I don't really get it, but it's great for a contrarian if you have the ways to measure these kind of sentiment setups, and then do the opposite, obviously. So I'm still optimistic that we're going to see a higher stock market overall. I think that gold will definitely run to $3,000. That's my target. I think that Bitcoin most likely will see 130,000 during the course of the year. But as I said already, I believe also that it's going to be a hell of a ride. It's going to be a roller coaster. It's going to be very volatile. with moves that many people haven't seen in their lives, I assume. So, and that is because we have a very crazy mix of a new president with a most likely strong team of entrepreneurs that will push free markets, free speech, but at the same time want to cut bureaucracy and the deep state, which might actually create quite a lot of turmoil and also could, for a period of time, create problems in the markets. We know that geopolitics are not solved. We most likely see actually even more intense situations. And we see at the same time AI marching higher and basically attacking all parts of our world now, our life. So it's a very complicated, complex mix. Overall, you can be sure that if there's problems, they will print more money. So that's why I said cracker boom. I think that's the main topic overall, but it's going to be volatile.
Florian highlights that silver markets are underpinned by strong fundamentals, with a persistent supply deficit and limited potential to expand mine output beyond the annual 800 million ounces. Demand remains robust, driven by China and the solar industry, while no significant new mines are emerging. Despite this, silver's price often lags before making sudden, sharp moves. Looking ahead, a rally appears likely in the coming months, reminiscent of the summer of 2020, when silver surged from $20 to $30 in a matter of weeks. A similar move, driven by tight supply and surging demand, could push silver from just below $30 to $50 by mid-year. Florian also talks about the gold-silver ratio, a valuable tool for analyzing the precious metals sector, though it currently offers no strong signals. Fundamentally, with 10 ounces of silver in the ground for every ounce of gold, the current ratio of around 90 suggests silver is significantly undervalued. A decisive shift could occur if the ratio falls below 75, signaling silver's potential to decouple from gold and stage a strong rally. While silver has been lagging behind gold for the past 2 years, this undervaluation highlights its significant upside potential. Florian highlights that the mining sector has underperformed despite strong gold prices, with most junior and exploration stocks lagging significantly. While some select mining stocks have done well, they require precise stock picking. A significant divergence remains between mining stocks and gold prices, but this gap is expected to close eventually, likely through a sharp and rapid rally, as seen in past cycles. For this to happen, the sector needs more momentum, such as increased M&A activity and renewed investor confidence. Western investors remain focused on assets like the S&P 500 and Bitcoin ETFs, while gold's strength is driven by physical demand from Asia, which doesn't translate to American mining stocks. Patience is key, as the mining sector's eventual rally could be sudden and significant. Now, let's get back to the interview.
One of the most interesting factors for last year with silver was that we've seen a double-digit premium in the Shanghai physical markets for most of the year, right? And we know that silver for 4 years already is in a deficit. We know that it's very difficult to extend mine supply. We know that, roughly speaking, 800 million silver ounces a year, that's more or less what the mining industry is able to supply. But we know that there's lots of demand from China, from the solar industry, and there's no new mines coming on. So I think the fundamental analysis for silver is very strong here. I think there is a market that is desperately in need of more supply, and it's not coming, it's not showing up, it's not there. And so, yeah, it's just a question of time. I understand that if you look only at these fundamental numbers, people are questioning, why is it not already happening? But that's the nature of silver. It's always lagging, and then suddenly it shows up brutally and violently. And again, it's still outstanding. It will happen. Maybe, most likely, it will happen over the next few months. That's been my expectation. I published a few papers over the last few months where I said, I assume there is a very good chance that silver at some point will kick in. And remember the summer of 2020. I mean, silver was beaten down at the COVID crash down to $11, $12. And then in the summer of 2020, within like a few weeks, it rallied from $20 to $30, 50%. That's what silver can do. So it doesn't take too much for a rally here from slightly below $30 to $50 in the next few months, maybe until summer. Well, I mean, the gold-silver ratio is an important tool to analyze the precious metal sector in itself. If gold is so strong in comparison to silver, or silver is just following gold like it is doing now for the last 2 years, basically, It's not so important, I would say, but then again, you look at it and it gives you some insights or hints like what's the next direction of the whole sector probably. Right now, I don't see any important signal here. I mean, from a fundamental perspective, we know that there's 10 ounces of silver in the ground for each ounce of gold. So a ratio at 90 is completely far away and disconnected from the reality in the earth. But that's what the market is playing right now. And I think it just shows us that silver is still very much undervalued here and has a lot of potential to catch up to gold. I don't see any important signals right now, but I think once the gold-silver ratio would fall below, let's say 75, that probably would be the trigger for silver to really kick in and do its own thing and rally hard. Overall, I would say, I mean, we've seen some activity in September, October. I think you mentioned it before with the financings, but overall, obviously, most of the investors are disappointed by the performance of their mining stocks.
While gold and silver markets face near-term consolidation and volatility, their strong fundamentals and historical patterns suggest significant upside potential in the coming months. Geopolitical tensions, economic shifts, and evolving investor sentiment will continue to shape the landscape, offering challenges and opportunities for investors willing to navigate the uncertainty with patience and strategic foresight. How do you see central bank policies influencing gold and silver prices shortly? What specific indicators should investors watch to anticipate a breakout in the mining sector? We'd love to hear your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for joining us on this journey.